Good to see that. It's so cool to see Brother Zhang Yatong around for us this morning, MAO. Thank you, bro. Okay, all right. Now today is 3rd of February 2022. It's a Thursday. Wow. Okay, this week go pretty fast because we have a short week, a short day on Monday, then Tuesday, then Wednesday was holiday. Today Thursday, and in fact today Hong Kong is on holiday. So which means that imagine yourself if you are in Hong Kong, all you do is just take tomorrow off. You have one whole week of holiday. Okay, all right. Now, today we have a lot of things to share. Now, we are talking about what George Soros had to say on this President Xi Jinping. Interesting. And of course, we have NFT. Wow, apparently there's a lot of money laundering in NFT circuit. Now, but today, because of the lot of data, I couldn't do this. I'll just share a bit of here. Apparently now itself, there's ongoing money laundering using NFT. And of course, because of that itself, I'm sure in a matter of months, there'll be another set of regulation coming in, and there'll be some clampdown. Now, recently the NFT market has been pretty hot, and all I can say is this, well, I can't say some of the drawing now. Some drawing are pretty good. Some drawing are really done in a very sketchy way, but yet they fetch like tens to hundreds of thousands of dollars, some in $1 million. So to me, is that this is over speculation, and it's just like a last burst of fire, like penny counters going to be pushed up just for the sake of the stock market, the biggest cross-scale market is coming down. So I'm not too sure is this the reason, but I'm not very optimistic on this one here at the time being. And of course, we have the Russia, Ukraine, US issue that is ongoing right now, and Joe Biden seemingly is very, very cautious to the wind, especially now as more troops are lining at the borders. And of course, we have an incredible ADP yesterday, whereby everybody was looking at least like 200,000 to 400,000 jobs. But when the ADP number came out, it was minus 301,000. This is really amazing. Now, on the normal market itself, the market was sold out by 300 to 400 points. In a bear market, we will see 1,000 points. But in a bullish market right now, at this current moment, definitely it may be ignored. And this is what we saw. So what happened will be this coming Friday, NFP. All right. And last but not least, undeniable, Meta, which is Facebook previously, has came out their result, and it was a pretty bad result in some people's opinion, and it came down as bad as the share price now is down by 22%. Oh my god, that means that the post-market shares now is down by 22%. Now if plus yesterday's closing, that means that overall itself this counter is down by 24 to 25% from the year start until now. Now this is all pretty bad. Okay, so before we start the day, MAO disclaimer apply as usual. My job is to make sure that you guys get the best out of it. Your job is to make sure you all listen, do some reference checking, and then after that, do your own risk management and trade accordingly. All right, kindly like and share this today because there's loads of stuff to share with many people. Okay? All right, let's go. Now, one thing is out today is Chu San, right? Now, I remember vividly is out normally Chu San, we don't really go out to Bai Nian. All right, we don't do greetings. So I just do a bit of just a trivia checking for you. So apparently, what's the reason? Now, the reason is because on Chu San, we do not Bai Nian. It's very easy to get in a quarrel fight on this day. So, of course, this tradition is no longer exists and it's disappearing because people still go Chu San Bai Nian, right? So usually Chu San, we go back to work. So let's say today you're going to do some Bai Nian, right? Maybe just be careful yourself to have some kou jiao, all right? Okay, interesting. At least I get to share this with you. Okay, so I just basically decided to do some sharing here yourself. Okay, cool. All right, now take a look at this one, the Wall Street joke of the day. Okay, now this is something that interesting. Now this picture shows that these guys are moving away while the quad 4 is basically pouring like a thunderstorm. And of course, the bulls are running into the quad 4. And obviously, the English language that they use is a bit of profanity. So that's why they mark it like that. Okay, now what is quad 4 then? Quad 4 is actually a lingo used by a group of guys. So let me just bring to you what they use it for. Okay, to them itself, quad 4 is when growth and inflation are slowing. Now, growth slowing, we understand, especially in a recession. But for inflation to slow down itself, right, it's not usual because usually inflation is up, then growth is slower. We call it stagflation. But apparently it's all right. In this case, when let's say inflation is slowing, now why could inflation be slowing? Well, it all depends how you see it. Maybe when the growth is actually very bad, people don't want to spend anymore, and that is probably going to bring down inflation. But that is going to be very difficult to see that. although we did see it apparently in 2008 and 2001. Now, usually in quad 4 positioning, the technology companies and other growth-oriented companies will perform poorly. And usually bonds, gold, utility stocks will do better. But of course, now you are seeing that the bonds are not doing well. The bonds are coming off. That's why the yields are going up. So this one, I'll leave it to you to decide. Yeah, I'm not too keen about this, but just to show you that I'm more important. Like, I feel that this is a very big word to use on the bull, and I think that it's all possible. All right, now the thing is this, okay? The thing is this, just early last month, okay, in mid of last month actually, Joe Biden says that inflation report shows progress is slowing down runaway prices. So basically, Joe Biden says that the latest consumer price index or the inflation report is slowing down, okay? So that is mid of January, okay? But as you can see that recently, the data shows that it's surging. So apparently it's all right, okay? This is not really reflecting. So one thing to note is that although people are saying that inflation is slowing down, but we look at the next month and the next following month inflation. Now, if the market goes past 7% to 8% to even 10%, I think that Joe Biden is reading a wrong report, and apparently this is going to be very scary for a lot of people. Now, I want to bring you this to you. This is the S&P 500 chart, okay, that I want to share you today. Now, the last few days, I'm not too sure what were you listening, but I was pretty bullish. I say that Monday, I did say on Monday, I say that Monday, the market will be up. I say Tuesday, the market will be up. Then Wednesday, the market will likely be a bit of flat, flat. But then Thursday and Friday, I suspect the market will be down. All right, so that was what I say on the Monday's MAO before our Chinese New Year. So what we saw was that indeed the Monday, the market went up. On Tuesday, the market went up. And yesterday, overall, it also went up. So that means that last 3 days, if you're buying into the market itself, right, you should be making money. Okay, now the only thing is this, like today, what I shared in my front title, I said that is it good time to take some profit? The answer will be yes. So I repeat, so I believe that, okay, I believe that today and tomorrow will be good for profit taking. Okay, so I already key it for you yourself, for you to decide, yeah? Okay, so let's just look at the chart once again and to explain to you more on details on my view. This is point A, this is point B, and this is point C and D. So of course the market break up and went all the way up. Okay, so cool, understand that? Okay, now take this away first. Okay, so a major trend. Okay, major trend A and B, and then now C. Okay, now the next trend is the one that from B to here, we have it at X, okay? B to X, can you see that? Okay. And of course, the support will be from here. Let's say we call it as D to Y. Okay, so now what happened is that when the market linked here and connect itself, and once the market broke Y, you can see the market really came off. Okay, so now what happened is that the market rebounded and went back above the D trend, okay, the D support level. Okay, so now take a look. The reason why it rebounded was because it went down to the oversold region, and that was the reason why I said the market will likely rebound, because the last time we saw this was somewhere back in 2020, which the market also rebounded. If you look back in 2019, it also rebounded. And of course, back to 2019 October, in January, rebounded a short while. And of course, that was the start of A in 2018. So every time the RSI basically goes down to 30 and below, it looks beautiful for a buy. Okay, so remember that as well. It looks beautiful for a buy. Okay, so now this is part one. Let's start for part two. Okay, let's bring the chart in. Okay, S&P chart. Okay, so now take a look, everybody. So if I make the chart bigger right now, let's take a look at the chart now. It looks beautiful. Okay, there's something that I want to explain to you why I would say that this 2-day kindly take profit. Do you notice that as the price is going up itself, okay? Now, previously, when the price is going up over here, the volume actually increases, okay? Can you see that? Yeah? So you will notice that, right? Okay, so now this time now, do you notice that the volume itself is not really increasing? So that's the first reason that I'm not very optimistic nor whatever, more cautious, okay, in fact, on this. Now, second, if you actually notice that the market have tried 4 times to 5 times to find a base and recover, okay. So with that itself, right, okay, so we can see that this is generally the range top and this is the range bottom, okay. So this area here, okay, now, if you look at this area here, let's put the levels in, let's take a look, everybody. If I put the levels in, just to share this with you, okay, this is a technical point, okay, here, somewhere around here. And then another technical point, which is a low, which is somewhere here. Okay, okay, this is a technical point, right? So what we have is that for the S&P 500, of course, the low is here, but we do not use that point. Okay, we use common points. So 4293 and 4433. Okay, so what do you take a look, guys? If I take 4433 minus 4293, what do you get? 4433 minus 4293, what do I get? Can someone help me on this? Right, if you take these two numbers, add together, minus 4433 minus 4293, what do you get? Can I have an answer from all of you? Now, for those who are first time joining us in MAO, it's all right, market analysis and outlook. Okay. Second of all, I like to be more interactive. I like people to talk to me as well. Of course, I want to hear you guys typing to me what's your view on the market and stuff like that. Would be excellent. And if you have any question to ask me, you can also go live and ask me right now. Okay, the number I can get to see from David and this Yongming. All right, that'll be 140, exactly, 140. Okay, very good. So now we take this number, 140 plus back 4433. Take 4433 plus back 140. We take 4433 plus back 140. What do we get? Can someone tell me now? 4433 plus 140. What do we get? Okay, like I say again, I love to make things interactive. I want you guys to tell your friends that this guy is going live right now and he's actually sharing market views. And he's pretty decent because his view is most of the time pretty accurate. Okay. Of course, sometimes I'm wrong, but sometimes I'm right, and overall itself right. Okay, I'll have a decent rating. Okay, we have Serene giving number now. Very nice, Serene. Thank you very much. And the number is 4573. Okay, 4573. So what I do is I take a line here itself. Okay, put it there, and then I double click the line. Okay, I want 4573 to be included, and I press OK. Can you see that right now? Yay! Now you understand why itself. Okay, you can see that the market really hit the number 4573. Okay, so now there's one more view to go. That means that what I did was I take the range of 4433 to 4293. I take the range, I get 140 points. Now, my belief is this: when the market is ding-donging itself, once it break out, right, usually this will go by 1-4. This is always what I preach to my student. And indeed, the market within 3 days really hit this number here, 4573. So perfect. All right. So now what's next? Okay, now we saw this already. Now we look at the next way to draw this thing right now. Okay. All right. So once we have that, we take away all the drawings. Okay. Now we do a Fibonacci here itself. Okay. I take the highest point, all-time high. I drag it down to the low, which is here. The low is here, guys. Okay. Put it down to the lowest point. Okay. All right. So once I have the lowest point itself, you notice that this is what is happening right now. Take a look, everybody. Okay, what do you see, guys? Do you notice that? Do you notice that? Oops. Oh, I didn't draw it. Okay. Sorry, my bad. Okay, I'll put it down again. Okay. So what do you notice that, guys? Amazing, guys. Amazing. You take the highest point, all-time high, and the recent low, and you do a Fibonacci, you notice that it's a 61.8. And amazing, the S&P actually closed there. Oh my God, this is really better than what you can think of. This is amazing Fibonacci. Okay, so now this is where it gets interesting, everybody. Now, the market has really went up by 1-4. That means the upside has been given. All right, 45, 73, done deal. Yeah. Okay, so watch this, everybody. Now we have a Fibonacci at 45.89, which the market beautifully have triggered it also. Now the upside first, if we continue to rally, it will go up all the way here is 46.89. That means it's 100 points from where we are right now, 100 points. So that means the Dow Jones may go up by another 800 points on average, okay? On the flip side, if the market breaks down 45.73, okay, if the S&P break below 45.73, then of course, there could be some profit taking. And this time around, it will test the trend line that I draw. Now, you will notice the first time when the market broke the trend line here, it collapsed the market all the way down. Okay, can you see that? Okay, so this time around, this level here, approximately, let's see, what is this level here, okay? This level here, approximately, is about 45.40. 45.40, okay, write it down somewhere, 45.40. So what I'm trying to say is this, S&P 500 may pull back next few days on profit taking. 4540 on the spot market is going to be a very critical point, 4540. Now, if the market can hold it and rebound, that means that very high chance we will see the market going back all to all-time high. Okay? Now, if the market fail and doesn't stay above 4540, then there is a chance to see a lower level, and that could be as low as about 4200 level. Okay, so guys, this is my technical view. Then you can see that, right? Usually my technical view, although maybe the back, but I like to do things a bit different. I like to in between slot in technical, so you have to really go through the whole MAO to hear me out. Okay, so some people, they choose to watch my MAO at the back, so they miss out the goodies in the front. So that's why, you know, I'm trying to play around with it. So I hope that you guys will go through with me the entire MAO. I think that'll be more fun than not. Okay, guys, cool. All right, so hopefully you take note of this page, take a screenshot right now so that you can know exactly what's my view of the market. I'm giving you both view right now to tell you that what's my take on the market. And remember, I told you the RSI at 30 is very powerful. Yeah, okay, so cool. Let's go. All right, now, on Monday, on the 31st of January, right, I was online. I was sharing with you guys my view of the market. And I say that, right, the Dow Jones most likely could be going to 35,043. And I also say that, right, if let's say they're really going to push it up, it will go all the way to the moving average. And that's 35,296. Now, do note back then it was only 34,775. That means that if I'm correct, the market has to go up by at least 600 points. So that was what I said during the MAO. I did say that if the market pulls back down, the market may go down to MLP 34,474. But if the market stays above OP, it will generally go up. And look at it, my friends. The market really went to the moving average 35,309 area. So that means that the market really was spot on. Okay, Dow was really spot on. Yeah, I was definitely correct. So guys, you key the word Dow spot on for me to help me for marketing purposes, because I did say that the Dow will go towards the MA if the market is going to push up. So that is a reason why that's so important that we, you know, all these are all on Facebook. You cannot lie about this. That's the reason why I keep on telling people this, that, you know, if you want to know my views, just go to Facebook. You can actually see them because all is there. I cannot change, not edit the video, right? Once it's done itself. Okay, all right, first one. Now, the second one is this, which is the S&P 500, obviously, right? So I already tell you, if S&P 500 will go any higher after the ding-donging, it will go to 45.88. I said that, right? I even asked you guys, how many of you say go to 45.88 versus the 40.96? Now, I did say that, right? If the market goes up, you go to 45.88, unless it goes down at 40.96. So that was what I said, all right? Although I did choose 40.096, I thought that the market was coming down, but I said that if my estimate is actually correct, then the market will be going up instead. So what do we see in the market chart? You can see over here itself, undeniable. Wow, look at S&P 500. The S&P 500 really shoot up all the way. And the crazy part is this number. The number I gave was 45.88, and the market really hit 45.88 right at the high. Oh my goodness. Yesterday, the S&P 500 really hits 45.88 perfectly and then come off. This is crazy. This is the TWB system, guys. This is what you really need from us. So S&P was totally spot on. The number was perfect and it was great call. So guys, do me a favor. If you think that I did a pretty good job, please key the word S&P spot on for me. All right, thank you very much. Okay, it was really a pretty cool level, 45.88. Now, of course, did we benefit? Obviously, we did benefit, and we were pretty clear with that. And of course, now today is a doji directional day. We could see some profit taking if the market stays below OP today. Yeah, so do take note of that, traders. This is very important. Okay. All right, so this is done deal itself. Let's just take a look at this one here. Now, yesterday I posted, even though it was Chinese New Year Day celebration I still decided to write this because I saw what I don't like in a chart. Now, what I did is that I said that we'll up ETF going to crash down again. So I gave my reason, and the reason was because the volume did not follow through. The volume did not follow through. So I suspected that the UP innovation will go down again. And of course, you can see last night, the UP innovation really came down. The opening price was about $77, and then it came down to close to $73. Now you notice that the volume itself actually increases when it was coming down. So this shows that, right, there are more seller than buyer yesterday. And most likely, I believe that UP innovation can come down to as low as 60, sorry, right now for you. I believe that UP innovation can have the potential to reach a 60 to 62 level, okay? Now, I'm not against Cathy Wood, but I just feel that, right, her selection of shares now is going to get worse as the time goes by because these are mostly her picks are gold growth stocks. So the problem with growth stock is that they need to have the environment to support it itself. They need the environment. So if the environment now is no longer easy monetary policy and the indices are not doing that well, usually growth stock will be hit. But if the market comes to a good level, like 60 to 62, maybe for people who are more adventurous, they don't mind taking some risks, you can try to buy here. So now for me itself, I'm not going to touch ETF probably until later part of this, maybe mid of this year or later. Yeah, because I think that, right, it will have more downside to go. Now I cannot see how low can it go. I'm not able to give you a crystal ball feel, but 60 to 62 is a level that I've been calling, and I'm quite adamant on this. So yeah, okay, thank you, Susan. Okay, this is the UP innovation. Okay, so now let's do this. Now, yesterday we asked you, on Monday we asked you guys what will be the ADP number, and of course many of you have came in to guess, and of course all the numbers were all positive number. No one gave a negative number because it's not really possible. So what happened is that basically no one wins. Okay, no one won the competition, the guess and win. So now the snowball price is 19.88. Wow, 19.88. So which means that today, initial jobless claim. What do you think will be a number? Now, initial jobless claim will be much easier to predict because most likely it will be somewhere near the consensus. So everybody now, let's see who will win this one. Okay, if this is no winner, my God, if we're going for non-farm payroll this coming Friday. Okay, so everybody, let's do it right now. What do you think? The initial jobless claims for today. What number do you think it will be? Now, the last number result we saw was 260, and then the number came in was 245, slightly lower than expected. So what do you think, guys? What do you think will be tonight initial jobless claim? I give you 30 seconds right now. As usual, again, you guys just predict end of the day, the one that got the exact figure will win. But of course, the one, if I say got two winners, two exact winners, therefore they will split the price. Now, we are now giving out the biggest price ever, 19.88 for this guess and win, because usually it's the highest of 23 or 26 if someone won it already. Now it's at 29.88 all-time high level. Okay, so what do you think the number is? I can see now some put 280, some put 210, some below 200. Okay, some put 245, 255. Okay, you can give whatever number you want. It's all yours to take. All right, now the last 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, now my view, initial jobless claim. Okay, my figure is 222,000. Okay, let's see who will be the lucky winner and win. Now, if today still got no winner, then tomorrow non-farm payroll will be fun. Okay, tomorrow non-farm will be very fun. Okay, all right, let's go. Okay, let's look at what happened last night. The Dow Jones was again pretty flat at the start of the day for the first 2 hours. Then after that, it began to show some impact. And of course, by 2 a.m., it kept on rallying all the way before some profit taking towards the end. So after all, the market's up by 224 points. That's again another amazing run over here itself. Okay, this is the third day in a row the Dow is going up. Okay, so what's the reason? Now, stock rise for the fourth straight day as Alphabet fuels tech gains. Dow jumps more than 200 points. Now, what happened was we noticed that there are a few main reasons. Was Alphabet, basically the gain was very good, and that pushes up all the techies. And there's some emotion is winding down as greed is replaced by fear. So no longer fear, apparently. So the fear of missing out is coming in right now, FOMO, and people feel that this rally is going to be more powerful, and the all-time high is just a glimpse away. So in fact itself, right, main thing is that some of the tech shares came down quite substantially, right, down 15% from the all-time high. So that's why traders decided that it's a good time to buy. And of course, the question is, now we do have a potential of an interest rate hike in March, and some people are worried, say that, right, it may actually expose their lofty valuation and operating costs. But of course, there's only a very minority, because most people think that it doesn't matter. As long as the company is doing well, why not? So of course, other counter like PayPal slide 24% because of the inflation issue. And another thing that she was supposed to be a dampener, but the market didn't care, was the ADP number. So they talk about this ADP number and NFP number later, yeah? So January payroll on Friday could be rough because as many as 4,000 jobs, 400,000 jobs lost by one estimate. Okay, apparently, after what we saw in ADP, which is a negative number, so now PNC is expecting Friday payroll to show a decline, minus sign 400,000, while Goldman Sachs is expecting a minus 250. But the point is this: if you look back, okay, look back, everybody look back. You notice this: majority of the consensus are looking at 150,000 positive. So now we have many other houses, even Goldman Sachs, are looking at a lower number, but yet the consensus are looking at a higher number, if not a positive number, 150,000. So again, I don't know what will happen, but this is fun. Okay, so now you can see over here itself, they're expecting that PNC expecting a 400,000 drop minus sign. And of course, the reason given was because of the virus infection, taking care of family, and kids can't go to school, weaker demand in restaurants, bars, and hotels. But Goldman Sachs is even is slightly better, 250. But the thing is this: if these guys are looking at a negative number, but the market looking at a positive number, who should we trust then? But based on the ADP number now, it is very possible to see a negative number, yeah? Now, the thing is that they're saying that once there is a peak on the COVID cases, the market will rebound. So what I did is that I take a look now. The market did actually hit a peak recently in January, and about 800,000 people falling sick, all right? Okay, around there. New cases more than 1 million, that's for sure. Okay, but look at it, what happened on the 2nd of September, whereby the market peaked, right? So what the market did, the market actually really came off a bit before recovery. So that is interesting, yeah? Now, today itself, right, we saw the Meta result already. Today, after that, after market close, we have the Amazon. All right, we have Snap. We have, okay, that's all, because the rest are not that big brands. All right, then Friday, there's nothing much itself. So today, most likely after market close. Now, the thing is this, people are asking me what's my view on the Amazon shares. I mean, so-called moving on. Let me just bring the chart for you. You tell me what you see in the chart, okay? It's easier to actually do this on, okay? Amazon. Okay. Now, everybody take a look at Amazon. So Amazon shares have been coming down since the November period. It's been down all the way. Now, of course, recently it rebounded with the technology counters. But yesterday, you can see that the share price, once it opened at 31.01, straight away it sell down all the way to 31.2. So this doesn't look good, right? It doesn't look that good. So I suspect that there could be a little bit more selling. And if that's the case itself, right, it doesn't show me any way that the earnings will be any better. So I suspect that, right, we may see down all the way to 2,800 again. We could see coming down to 2,800 again. All right, so that's my view on Amazon. I don't think the result will be good. I can be wrong. So let's take a look and see. Now, Facebook this morning plunged the share price after the market plunged by 20% on weak earnings and big forecast miss. So the prime idea is that, as I said before, many companies may have a better result in last quarter, but they may have a very disastrous outlook for this quarter. And I tell you that early this year. So the thing is that the revenue was about 29 billion, but the market was at 30 billion, so it's lower. But more important is that the people now are saying that the subscription rate, the users are much lesser, and of course, there's other reason. Now, of course, we can see that, right? Alphabet did well, okay? Apple did well, Microsoft did not. So now with the FANG counters, it's all right. Out of the 4 of them, 2 of them are not so good, 2 of them are okay. So end of the day is this, if you look carefully now for Meta, before this morning, 20% drop is already down by 4%. So this counter actually from the start of the year and then now is not doing well. And usually if share price not doing well from the start and then now, that means that there'll be further downside in the time to come, yeah? Right, so Mark Zuckerberg itself, his metaverse business lost more than $10 billion. My God, 10 billion. 10 billion is loads of money, my friend. It's like, it's really 10,000 millions, my goodness. Okay, so Reality Labs is the company that Facebook is using, and they lost 10 billion alone. They spent a lot of money to find the next stage of growth, to try the idea. Okay, let's take a look. So in terms of net, okay, you can see that the net loss of 4.5 billion to 500 million in revenue. So that means there's a very big drop here as well. And of course, net loss of 6.62 billion to 1.14. So I'm not sure what is lost here as well. And of course, we're talking about this one here, whereby, overall, okay, this is last 3 years, sorry, my bad. All right, so it looks pretty bad, yeah? So the only thing is this, it's just like, last time when we have Grab, people spend, and after that, they give back their money. So is this a way that Mark Zuckerberg doing this to do into the metaverse world itself? It is possible. Okay, so if I say now, if the metaverse problem wasn't there, they were actually making a $56 billion profit already. Okay, all right. So let's review what happened on Friday, on yesterday's market. Now, yesterday's market, as you can see on your screen now, pretty clear. The market opens between the two pivot, but once you purposely touch the MA30 and MA200, it was a buy, and staying above MLP was a confirmed buy, and of course, the upside could only be one, and that's 35,637. So the market really, really performed according to the plan. So let's take a look at the intraday chart itself. Intraday, the market was ding dong, nothing much throughout the whole day. Then after we notice that there's 2 green dots here, that means that some bigger movement is coming in. And of course, the best part is the market created a BNB at the lowest point. Let me just show it to you live right now. Hold on. Okay, yes, this is live right now. Now, on your screen just now, you see, right, there were no green, but you see now, there's a bomb actually right at the bottom of the screen yesterday. So which means that how to utilize this, all you do is just draw 2 lines, the high and the low. And once the market cross, oops, sorry, my bad, didn't do this. Okay, once the market cross above the line, you can see right here, straight away, the market rally. Can you see that? Pretty cool, right? So that's why when you see a BNB at the lowest point of the day, this is actually considered to a bomb, and usually it's pretty accurate to pick up the bottom. If you're even more adventurous, you can buy somewhere nearer to this area to squeeze the market a bit more. So once again, guys, this is how we actually utilize our TWB system version 5.0 to give us a little bit of competitive edge so that we know exactly what to do when we actually see all this thing. Some people see as, we don't know what's going on, but to us itself, we see it as a gem. So that's why we buy it, yeah? So that was why yesterday, so you can see the market really, really went up based on that. Okay, all right, continue. So that was the Dow and the gold. Yesterday, I did say that gold will likely be bottoming out soon a little bit. And obviously, yesterday, the market opens. It purposely came down to pivot 2, couldn't go down, reverse, cross MLP, cross the MA30, 200. So most likely, it's going to go to MA30, which is 1815. And that was exactly what I wrote there. And of course, how did the gold perform? You can take a look now. Gold actually really did that. Initially came down, purposely touches the pivot 2, couldn't go lower, no CCYR below P2. So when the market reversed, you notice that the KSI all the way in green. So once the market goes up, this is where you can look to buy if you want to. Now, you can play it safe, you can cross OP to buy, but it's not necessary because this is not a must be above OP and pivot 2 to buy. Yeah. Okay. So this is where you can buy the first time. And if you want to do, you can buy and add on the second time, somewhere around there. Then after that, I saw the market go continue to rally, and then a star is born. You draw the 2 lines, and here we go. The market is down. Okay, got it? So that's a simple way to trade with your TWB system, yeah? Okay, so now look at some local and global news right now. Okay, first of all, as I said, some people asking me, are you sure there's a Winter Olympic? Yes, there is, my friends. On the 4th of February, which is tomorrow, will be the start of the Olympic Games in Beijing 2022, okay? And of course, already there's some news ongoing on as well. Let me just bring some to you. All right, apparently it will be a low-key Beijing 2022 compared to the 2008 Beijing Olympic. And of course, lesser people is going there, well, but still the 30 head of states is attending the Beijing Olympic out of the 90 countries. Now, normally about 100 plus countries. This time around, it's a bit watered down. And of course, some of the organization is not sending people in because they are kind of like a little bit against China. So that's why China also not going to just let it be. They will likely do something to like a bit of sanction on those people who are athletes or entities who doesn't want to come this time around. Something like that, okay? All right, now Xi Jinping obviously, right, has not set foot outside China. Now this one is a news from 2021, September. So which means that now until today, another about how many days? About 160 days. So about 770 days, Xi Jinping has not set foot outside China because there are some worry about his current holding in China. Now do note, right, example like George Soros. Excuse me. George Soros himself says that he feels that, right, the current Omicron variant has threatened Xi Jinping's underdoing, and the virus is now no longer under control in China. So it's a very heavy statement. It's a very heavy statement, and obviously, why would he want to say this at this very time itself is either that he has some inside information or he just basically slandering it and try to profit from it, and which is always something that he probably is well known of. All right. So of course we don't know. So we're going to take a look itself, but definitely this year is the start for China, and I think that this is going to be a very interesting period for this country. All right. Now, US is the one that's now basically trying to play the devil in a way. To now he has moved 3,000 troops closer to Ukraine as Russia crisis escalating now. Okay, as you can see now, Joe Biden has sent another 2,000 troops to US to Poland and Germany, and of course now they're total 3,000 soldiers. And you can see that, right, it's no kidding. Every day we can see news covering on this particular event. And of course, now you can see that even though it's a winter period, but they are not holding back. And the full military is all on standby. So basically, it's all right. If nothing goes wrong, it's good. But if someone did a very silly mistake, oh my goodness, things can get very, very bad. Because I'm sure Putin will not give face. He will likely press a button to stop all the gas, and this is going to create a major upheaval in Europe. So of course, nothing happened. All is good. The market will be bullish. If someone press a wrong button, this is going to be a very scary February, March period. Yeah. Now, some analysts are saying that a Russian invasion of Ukraine could send shockwave through financial market. Now, why financial market? Now, do note at the moment now the market is not even reacting on it. The financial market until now has been pretty positive. They didn't really bother. But of course, oil price and commodity prices are feeling the hit. So obviously it's all right if oil price continue to surge higher and commodity prices go higher, this will actually make people very nervous, and this will probably have a spillover effect on the US stock market. Now you can see that oil price is kind of like accelerating, as we can see. We see right now it bottomed out in the December period. All right, about $65. That was where I called for a buy. And in December period, I see you can add on position at about $68, and now we are about $77 to $78. So my view is this: the West Texas Intermediate crude oil, I believe, is going to go up, and my view is $80. That is the first wave, but my actual wave is 92. I believe that in the next few months, there's a chance to see crude oil going all the way to $92, and this will definitely again add pressure into the market. All right, now one thing is that if you are looking at something to buy with some speculation in mind, consider Palladium. Now, Palladium is now near the high, if not at all-time high level, even though there is nothing much going on. So I suspect that Palladium will be going to 2,700 in the months to come. Now, of course, Palladium, when it drops, can be quite drastic, just to be mindful on this. But when it recovers itself, you can see that the impact is there. So my view is this now: Palladium can go to 2,700 because of the current situation. I can be wrong, but you can just take a look yourself, yeah? Okay. Or Susan shared with us that there's a 5 doji on crude oil. Okay, later take a look. So some important market news for references. Okay, so now is Eurozone inflation hit new record, piling pressure on European Central Bank. So the cost of living of 16 nations now have went up by 5.1%. Despite the market was looking at a drop. How can that be? So the market was looking at a drop of 4.4, but the market came out 5.1, and the December was 5.0. This is absolutely rubbish in my opinion. So anyway, Christine Lagarde says that Europe is not likely to experience the same inflation increases as US itself. I really don't think so. I think Christine Lagarde itself, as a person, I don't buy it. Whenever she says something is all right, it doesn't come out true, correct. I tell you that. I mean, watching this for quite a while, I don't buy it. So anyway, she's saying that, okay, in fact, this guy from this particular place, from this Berenberg bank, says that, US is likely to raise interest rate by 6 times this year. Okay, but ECB Christine Lagarde says that, no. Okay, no. And last time it's she said that a rate hike is very unlikely in 2022. Unlikely. Come on, man. I don't think so. Okay, so anyway, she said that. Now that the market will be watching this very closely today, because if she changed her words that there could be some rate hikes coming in, turning hawkish, then of course the market will definitely swing even more. So I don't believe that Christine Lagarde can tell the market to have no interest rate hike, while US going to have probably 4 to even 6. So I cannot buy this. So careful, guys. This may be a crazy move. If let's say ECB decided to say that, okay, maybe they must have interest rate hike itself, then of course the dollar will be affected. Yeah, so take note of that. Now, FANG trade returned as the group set boost from Alphabet to lead the market comeback. Now, FANGs are your Facebook, your this Alphabet, your Google, your Amazon, and your Netflix plus Tesla. Okay, but you can see that now recently Netflix down, the share been down by 20% down, yeah? It's down by 20%. And of course, Alphabet went up. Amazon, Apple, Meta have been pretty flat. While the S&P 500 is also flat. So obviously, no need to say, if the market is down, all of this will likely be triggered. All right, so, but again, not everybody share the same view. So some of the analysts are saying that Google, it closed at 27.52, on February the 1st. They are looking at it will go higher to 34.57, up by another 25%. Wow. Okay, Facebook is 319. They are looking at 397, but then they don't know that now Facebook is down by 20%. Okay, so I just leave it there. Let's bring to you Facebook. Let's hold a minute. Okay, Facebook. Okay, take a look, guys. Facebook yesterday closed at 323, right? But now it's all right. The post-market data is not here. Okay, never mind. Meta stock price. Now you can see it's down to 249. 249. Now it's 249, down by $73 or 22.89%. Oh my God. Remember, I was very bearish on Facebook. I did say that. I told you guys I'm looking at the Facebook share to go down. And now with Facebook share down, it's now at what price again? Sorry, just forward again. The price is now at 249. 249. Oh my God. 249. Where is it? 249. 249 is all the way here. Oh my goodness. Let's show you to now 249. 249 is even lower than my forecast. Okay. Now that means that Facebook is going to open somewhere around here. Okay, around here. Now, will the market have some buying later when the cash market open? I believe there will be. I suspect it will be, yeah, because you see that this is entire Facebook. That means this is March 2021. And now it's going to go lower. Okay, go lower. That means the last time it was all the way here in January period. So will the market basically, definitely by coming here, it's already off the bear, it's a bear territory, right? So of course it's bear territory, but I suspect that if the market gap down so much, likely there'll be some intermittent rebound, but maybe it may go lower again in the near term. Okay, so traders watch out for Facebook today. Wow, down by 22% in a single day itself. Okay, 22%, that's a lot. Okay, all right, so this list is I'll leave it to you, but you can see that basically in short, everybody is kind of positive. And it's very interesting as well, right? The consensus says that, right, you're looking at a high number of Google, Facebook, Amazon, and Netflix, but Netflix was down. Then now we have Facebook is down. Google is up by 12%. So Apple is supposed to be up, but they only give 8%. So I kind of question mark their consensus. But the scary part is this, they're looking at Amazon to give out at 35%. Now this is very scary because Amazon, the data is coming out later today, and after market close. So imagine they are so optimistic that Amazon will go by 35%. Wow, what do you think will happen if the number don't come out, the number that they are looking at? So let's take a look at Amazon again. That's now we share with you earlier, right? Hold on a minute. So now if Amazon shares doesn't really follow what they are supposed to say, then if it pulls that down, it's all right, this is going to drop the market by then 1 or 2%. So that's why I can't see how Amazon share will be any better than Facebook shares itself. Okay, I will leave it there, but maybe Amazon will follow like Google, and then after that the share goes higher. It's all possible, yeah. Okay, so now this is what you can see now on the Nasdaq chart itself. Let me explain this to you. Now the Nasdaq chart, same thing like S&P chart I showed earlier. We have the uptrends and the major trend. So the market has to hold up here. If not, it will come back down. So let's take a look at the Amazon if the thing sharper so you can see better. Now if you look at this as well, right, look at the chart. Very beautiful charting here. The market actually came down, stopped at the trend line beautifully, and then after that, it's all right, plunge. Okay. Then of course, it found a base, and it ding dong for a while, and it regained back the same line. Now the scary part is yesterday, you can see that the market really stopped perfectly at the trend line. Got it? So how do I draw a trend line again? Let's show it to you live again. Let me show it to you now. This is how I draw my trend line, my major trend line recently on Nasdaq. So you can see that this is the major one. I took the lowest point, I stretched all the way to this point here to do this. So in between itself, there was nothing to connect me but just this particular level. Okay, so now you look at it right now. What's going to happen? Well, pretty sure if the market basically come back down, break the trend line, it will go down again and come down here perfectly because it's where it congregates. And that's about 14,400 level. Okay. Now, if the market really drop, okay, really break down, what number am I looking at in the middle? So most likely we could see about 13,600 level. So of course, some of us say, Kel, the current price is 15,139. You're telling me if you go down to 14.4 or even 13.6. Now you ask me this question, right? I think 14.4 will make some sense though. So which means that right now it's for 15,139. I suspect that the market may be going down to here itself to 14,400 before they can start to look at it. Okay, it's my personal view. Yeah. Now today's MA will be longer than usual, but 1.5 hours because I got lots of information to share with you today. Now, Cathy Wood stocks looks cheap after getting cut into half level, and some people are saying it's a buy over here. Now, like example, like say Coinbase. Coinbase is now down by 54% from its all-time high. DraftKings down by 68.2, Exact Science 51, Roku down by 66, and Block 55, Twilio 54, U2 72. So all these shares are down by at least 50%. All right. Now the thing is this. Some people are saying that the share price will go back up again. So there are someone say they'll go by 81%, some even better 100%, and blah blah blah. Okay, to me it's all right. To me, in my opinion, this is all BS. Okay, in my opinion, I don't think so. It will likely go lower. I believe that the market is going to go lower. Can I write down? I believe that, right, this is the Cathy Wood this time around was going to get hit this year pretty badly. And I suspect that, right, if this is going to continue, this will bring the whole entire portfolio down by another 10 to 15%. All right. So even Jim Cramer recognized the discount and said that he would rather own than sell almost the entire portfolio. To him himself, he said that now is a good time to buy a little bit more and keep. And if you go lower, buy more. Okay. I totally disagree, and to me, this is like the catching the falling knife. I totally disagree, and I think that there will be more downside coming in. All right, so that is my personal view on this, and I wrote to you. I showed you earlier that I believe that this innovation will go down further. Okay, guys, this is the very part right now you're waiting for. There'll be about at least 8, 9 slides to talk about alternate market views. This is going to be very cool. If you have friends who like to hear some alternate market views or some data that they think that is important to them, tell them to come on now, right now, because this is the time whereby you want to really hear some really solid news. Okay, now this is part 1. In total, I prepared about nearly 30 slides for you guys. So it's only part 1, but let me get fast and quick for all of us. Now, oops, sorry, the person got a problem already. Sorry, my bad. Yeah, go on. Yeah. Okay, so of course we have recently seen this guy online. This is the guy called Jeremy Grantham. Now he is one of the market boys who is a bullish trader. He was pretty accurate. This is the guy itself. Okay, he's saying in his own website, he's saying that the market most likely will go down lower. Now this guy, he was correct in the 1989 Japanese equity bubble. He was also correct back then in the TMT bubble. He also correct back the GFC crisis. And now he's saying that there's an equity super bubble coming up. He believes in reducing equity, focus more on non-US value and alternate strategies, equity dislocation by 20%, and of course, modest into something, but don't buy treasuries and the credits. Okay, in short itself, this guy is very bearish. But his charting I like, so I'm sharing this with you. Now take a look here yourself. Now, this is something that you must understand how to read this. So since 1996 until today, the market has been going up and down in terms of mathematics, right? So you can see back in the 2007 and 8, when the market hit the all-time high, all right, at the time itself, the forward P ratio was at 15.1 times. And at the time itself, the S&P dropped by 57% before it bottomed out. Then after that, they saw, right, at that point, the PE ratio was 10.4. So it's a very good time to buy into the market. And the market rose all the way by 400% from the lowest point to the highest point. And when the time it was 19.2x itself was considered high, the market went to profit taking on the pandemic, down by 34%. But then again, interestingly, when the market bottomed out in March 23rd of March 2020, The PE ratio 4 is 13.3, not the lowest level, but this is within acceptance. And the market now rallied by 113%. Now the question is this, look at it now. We are back to 21.2x of the thing level. Now the last time we saw this was 15.1, and the one back in 1999 was 25.2. So you add them together itself, you get actually a number of almost 22 levels. So we are actually at the same point right here. And the one in red is actually the mean. So now watch this, guys. When the market is too far away from the mean, eventually it came down to the mean. When the market goes away from the mean, eventually it closes back to the mean. But once it basically loses from the mean, it will eventually go back to the mean. Okay, so got the idea? So when the market back in 2020, when it's too far away from the mean, it came back down to the mean. Beautiful, right? Exactly spot on. But the problem is this now. Oh my goodness. Do you know how far are we now from the mean? Oh my God, we are so far away. So let's do a hypothesis. Let's say we really stop here. Let's say we do this. What will the S&P be? Oh my God, look at S&P. His point is this. That's the reason why he said that if the market really come back to the mean, the S&P 500 had dropped to 2,700. Oh my God. Now the S&P 500 is for 347.66. That means you're looking at the market to drop by at 2,000 points. I think it's really crazy stuff. What's to drop at 2,000 points? That means mathematically it's all right. The Dow Jones must drop by 16,000 points. I cannot see that happening. So I'm very skeptical on this way of computation, but history does seem that it doesn't lie. So of course, what do you think? Imagine now the Dow Jones at 36,000 and it dropped by 16,000 points. That means you can drop to 20,000. Oh my God. Oh, if that really happened, it's all right. I'm pretty sure many people go bankrupt. Many people will likely take the normal path and end their lives. So I don't think so, but again, this is all mathematics. It is like possible. So let me ask you now, there are 72 of you online right now. What do you think? Do you think that the market can go down to the mean, or you say no? Those who think it can go down to the mean say yes, YES. Those who say that no, press NO, no. But if you press no, can you tell me what number do you think the market will be going? All right, what number do you think the market will be going? Please key the number now. I don't have any prize for you. I'll just see the participation, or you guys will take some water. Okay, well, wait for your answers. I continue. All right, so this is why I'm going to show it to you. It seems that the market always will reverse to the mean, and that's the reason why. And now we are actually at 3 times standard deviation. We are now 3 times higher at the standard deviation level itself. Really pretty scary numbers, yeah? So statistically, it's all right. It doesn't look very good, nor in terms of the background of history, it doesn't seem that possible. Yeah, indeed, this Liu, I also agree with you. I think midpoint around there. So midpoint is, let's do a number here. Now it's 4,700, okay? Make it simple for all of us. And the mean, let's say we go down to 2,700, yeah? So that means that the middle of this will be 3,700. I think 3,700 is a rather fair figure. 3,700 is somewhere around here. I think pulling back by 3,700 is quite reasonable. So that means that the market dropped by 1,000 points. Possible. 1,000 points on the S&P, I think it's more possible. Yeah, 1,000 points itself means the Dow Jones must drop by 800 points. Because my own mathematics is 1 S&P point is about 8 points of the Dow Jones. So maybe we can see 3,700. Yeah, okay. Some say that, some people say that no PE at 12 to 15%. Okay, this Jimmy says that about 3,300. Okay, FICO, you're looking at 31, 38. Oh, a nice number. And David, you're looking at 34, 63. Okay. Okay, so now I am looking at 3,700. Okay, so for me, it's more mathematical. I prefer to think that the midpoint between the two of them, 3,700. Yeah, of course, it may go down lower, it may close a bit higher. But I think that if you can actually captivate this run, hey, that's a very good run. That means that now at the moment now, if you can make some money of this, let me just double check once again what's S&P right now. Yeah, the S&P now is at 45.89. Okay, 45.89. That means that if S&P drop to 3,700, wow, that's about already 1,300 points. That's a lot of money. 1,003, you can one single contract $13,000. Oh my God, $13,000. So you just hold one contract all the way down, you make $13,000. I think that's a pretty good deal. Yeah. Okay, so let's move on. So you can see that one of the scary part is the food prices, and that is the one that I believe is going to make the problem. Now you look at this. This is the house price index. Now back in 2009, the house pricing index is about 390, and that really pulled down the market. Now this time round, the price index is 539. So back then at 390, already very high, and the market pulls back from there. Now it's at 539, or it's actually more than that itself. So with that means that if housing price is going up at such a level and the earnings are not there, and let's say the buying purchasing power also reduced, this is going to add a lot of pressure to people, because that means they're going to spend more money on houses, and which of course they may not be able to afford that. And of course, food prices has also went up. Food prices has also went up. And of course, now it has a repertoire of what happened in 2008 and 9 and 2011. So what I did was I take a little quick look at the period during this two period of time, what happened to the market. The market actually came off, yeah, obviously itself. So that means that we are now actually at a very near point of this. And of course, back then, remember Bernanke, he says that subprime mortgage rules will not seriously hit the market. And that was in May 17, 2007. Now, after that itself, he said this, the market actually went up higher. But of course, by March itself, the market collapsed already. So of course, the Federal Reserve said that they will try to do their best and stuff like that. It's exactly what probably Jerome Powell is doing now, but we have seen that it didn't do as good as it is. So guys, if you believe in, if you remember that, it's all right. You know that these guys, their words are going to be dangerous to actually listen. Yeah. So you can see that right back then itself, after the food prices went to the highest point, the S&P 500 dropped quite drastically. In May 2008, of course, that was the Lehman Brothers time also. So maybe you can say that was what happened. But in 2011, the market also dropped by at least 200 to 300 points. So that's also about 30%. Yeah. So it actually speaks that the market actually may be going down in the coming February and March period. So of course, the stock market super bubble always started with a blow off. You can see that started with a blow off. And now in his opinion itself, by Robert Shiller, he believed that 2022 is also showing the same direction. And of course, you can see that the 10 largest weighted index, largest name is the one that's holding the market, but the Goldman Sachs non-profitable tech index is actually at a lower rank. So that means that if any time the companies, the top 10 really pull back down, right, the selling will be very scary. You see, the point is this, the top 10 counters now are the one holding the indices, or probably the boys are holding the top 10 to hold the S&P 500. So if, of course, some trainers are calling for buy on the top 10 and say that, you know what, it's a good time to buy because you're down by 10 to 15%, right, or 20% is a very good buy. But on the flip side itself, right, if let's say one day the boys all start to let go of these counters, they let go, then the market will free fall because the remaining counters are not supporting it because they are already down. So imagine if the top 10 start to come down in a very alarming speed, the whole market will just break down, come down like a pancake effect. And this will crash the market down very, very, very fast. Okay. So this is my warning here itself, is that, right, the top 10 companies is the one now holding the entire S&P, while the remaining are already negative. So it's like basically it's now with a stockpile like that. Okay, very stockpile, but it's all air prices in the building structure. So what happened now, if the market now is trying to ding dong, it will try to go down every time there's a lot of support over there. But one day something happened and slice it through, the whole inversion will happen and the market will just crash down very badly. Yeah. So this is my personal view right here itself, which I don't like it. And I can tell you this is an Apple alone itself is 12%. Apple alone, the weightage itself is 12% of the entire S&P 500. So you can imagine that if the market Apple goes down, wow, you cannot imagine how bad it will be for the market itself. So traders, please be very, very careful. Things may get really out of the hand, and this is going to be very scary. Yeah. Okay. Clear? All right, now this is another very scary chart that this GMO is using called the explaining the PE model. Now over here itself, you can see back in 1925 to current, back now in 2016 to 2020, you can see that all along itself, okay, all along itself, right, the predicted PE and the realized PE is always moving in tandem. Back in 2099, during this Nasdaq dot-com craziness, you can see that the realized PE actually went all the way up while the predicted PE is down. But after that, what happened? The market really pulled back down to go back to the so-called line. Okay. Then after that, in 2008 and 9, when it went away from it, it also climbed back in. So now we have a problem because now you can see it's happening again. The realized PE ratio versus the predicted PE ratio now is very far away. And that means that there is a high chance the market may pull. So look at it in percentage form itself. That means that we're looking at the market to be down by at least 15 to 20% move from where we are today. Now, this is scary because apparently now the correlationship in this chart is as high as 92%. So think about this. That means that now is 4,700. Let's say the market dropped by 10%. That'll be 4,300, 44, so 43, yeah, 4280 level. If it's going to be 15%, then that means the market can go down to the potentially 3,700 level. Yeah. So watch out for this. All of this is very possible because this is more than a 100-year chart. So a 100-year chart itself, right, is something that you don't want to miss. Yeah, because it's 100 years worth of data. So that means that it has its merit, guys. So I believe. Okay, so you can see there, I believe that we could see further downside in S&P 500 from February to May period. Okay, so I'm giving you my view. So I leave it to you to decide over there as well. Okay. Now this is where we have now the Shiller PE ratio. And of course, now we are at 37.03. We are now at the second all-time highest level since 1880. So this is scary. Since 1880, since then until now, the last, how many years is off? That means 140 over years record. Okay, 140 years record. And yet we are now actually at the third highest level. Of course, again, some people are saying that maybe, Cal, this is not going to be the crash. Thinking this is okay. But if you notice this back Tuesday in 1929, the market just sent down very fast. And okay, back in year 1999, the market also sent down very fast. So is this possible to see the market send down very fast this time around? I will let you to own decide. I cannot decide for you. You will look at it on your own, but I'm just telling you itself, right? This is actually very, very, very scary time. So guys, please be careful of what you're seeing right now. Because of the standard deviation I showed you earlier itself, I will not go that through again. All right, so that is the first part of this, part one of the alternate market news. Hope you like it. If you like this alternate market news, can you write in a comment right now? If you like the alternate market news, please key there. If you don't like, just put don't like itself. Just key there. I would like you all to do that for me, okay? Now we're going to go into the charts today. The bull goes moo, the bear goes grrr, and the flamingo is different this time. Let's go. Now, China market today is the cash market is closed, but the CFD is open, so you don't really see much movement. So I want to talk about that. Now, the US market is definitely open. Let's take a look at the US market for today. Now the US market for today, we can see right now, this today. Now the US market, actually, we have the MA30 and MA200 below it. So that means actually very bullish. And the MLP is 35,499. It's also it's very bullish. The KSI is red, but it's definitely very small, but no tick because today is a flat same level. So actually today is kind of bullish for the US market. Yeah, repeat, bullish. So if the market can stay above OP, the market can go back up again to 35,924. All right, now only if the market loses MLP, only if it loses MLP, then it will go down to 35,499. I suspect that later on in the European time, the Dow Jones may purposely touch MLP because the European did not see the selling in the Facebook side. But once it goes there itself, likely the market may rebound. So traders, watch out for that. Yeah. Nasdaq, Nasdaq a bit different because of the Facebook itself. We have a problem here. Nasdaq today, the opening price is below pivot 2. So below OP, below pivot 2, CCYR is a sell. Okay. Now the next level, it could be going down for the Nasdaq. It's as low as 14,469 level, which is very possible because the MA200 and MA30 is on top of it, and of course now it's below MLP and it's going to break below the cage. So there's a high chance that the Nasdaq may go down to 14,469. Now, if that really happened itself, right, that means it will wipe out the last 3-day gains. And if that happened itself, it's not very good because if the market continues to slide further, that means all the gains that they have gained over the last 4 days is all evaporated. Hence, therefore, there could be further selling in the weeks to come. Yeah, so watch out for that. S&P 500. Now, S&P 500 today is a DJDD, it's a doji directional day, and you can see that we have a big congregation here itself. The MA30, MA200, the MLP, all around there. Okay, so in short, what does it mean? If the market loses 45.40, if the market loses that, there is a chance for the S&P to drop all the way to 44.38. Now, that is a very big jump because it's down 100 points, so I don't think it will happen because the KSI is green, so maybe a bit of downside, and that's about it itself. But of course, losing the MA30 and MA200 will set the tone for potential further downside if this really happens. Yeah. Okay. So take note of that. Okay. Thank you very much, Jimmy, Liu, Chuseng, Dennis, Edwin. Thank you very much, David, Jennifer. You guys like the MAO, this order market news. Yeah. Thank you very much. Appreciate it. Okay. Then let's look at the Hang Seng. Hang Seng scores today. Nikkei. Now, Nikkei today, let's take a look. Nikkei is below the MA200, below MA30, and below MLP. So it's a sell. But the KSI is green. The KSI is green, and the KSI jump instead. So the downside will be limited. So downside limited, that means that it will bounce around at KTR -2 or -3. So you can see that the market really came down all the way from opening price. It came down all the way. But once it hit KTR -2, you see it stop there. So it shows that every time when you actually have KSI green, while the market is actually dead red downward, right, you will notice that the market will not close at the day low. Most of the time, not 100% of the time. So for Nikkei, in my opinion, itself, right, KSI is green. It may try to test back the MLP again. All right. But of course, if the market breaks down because of the Nasdaq, then of course Nikkei can drop all the way down to 26,600 level, which is a bit too far away, so I don't think ahead today. Now DAX, you can see that DAX has really shoot up all the way after since we called for a buy over here. DAX went all the way up to south. Now for DAX, it's actually very near at the MA230 and MA200. So that means that today 15,670 will be a very critical level for the DAX. If it stays up, it may go higher, but I don't think so. Likely it will pull back. So I believe that it may come down to maybe probably 15,500 area. Okay, this is what I view on DAX. Now, the one market that I'm pretty optimistic is crude oil. And yes, now Susan reminded us that crude oil, we have a bit of interesting thing. Crude oil, we have 4 to 5 doji. So 1 doji, 2, 3, 4, 5. 5 doji, oh my goodness, 5 doji on the chart. This is terrible. Now, with 5 doji on the chart, there's only 2 things that will happen. Number 1, crude oil is going to $90 because $90 is the BNB 1x1 level. And with 5 doji and big movement coming in, that means it's a $3 upside. Yeah. Now, if the market chose to go down because maybe the Nasdaq fall and that's cause a repercussion of stuff, then it will drop to $84, and that is also another $3. It's only negative. So that means that, right, if the market crude oil, this is where the paradox is. If the market goes up $90, if it goes down $84, MA30 level. Yeah. So what do you think, guys? Let me ask you guys now. There are about 65 of you online right now. How do you think? How many of you think that it's going to go to $90 in the next 2 weeks? Or how many of you think that it's going to go to the $84 in the next 2 weeks? Please key your number right now, 90 or 84. Let's just have the consensus here and see whether we can help one another. Okay. Judy looking at 90, Yongming looking at 90, Louis 90, Daniel also looking at 90, Louis looking at 92. Wow. Chuket also 90, Dennis also 90, Jimmy also 90, Chen Kui also at 90. Wow, so that everybody you get 90. Okay, let me give you my 2 cents view here, okay, my own. Now, logically speaking, we should see 90 because why? With the current tension now in this Ukraine and US, all right, and Russia, the high chance of going 90 is very, very high, okay, definitely. But of course, on the flip note, if there's no tension, nothing else, but then there is a stock market pullback on profit taking, then the crude oil may go down to $84 first because so many of us are looking at 90 and the market has been doji for the last 5 days. So unless a sudden acceleration of the problem in Russia, if not itself, right, the boys may purposely drive it down to 84 first, then pump it up to 90. It is actually possible, yeah? So if you want to ask me itself, right, I don't think at this time right now with the Chinese doing the China Olympic, Winter Olympic right now, right, I don't think that Russia will do anything. You see, China and Russia are very good friends, right? So I'm quite sure at this time right now, they will not want to trigger a war of nowhere. Then they will really take the attention from the Olympics. So I kind of believe that maybe it will only happen after the 20th of February. I'm just speculating, or maybe at least the first 10 days that should be okay. But of course, if not, once the market choose one side, well, it's going to be 90 or 84. This one we have to take a look, yeah. Okay, done. Crude oil. Okay, now we'll get the gold market. Now, gold is, I already told you, gold will firm around at about this 1,788 is firm around there. So for today, it's all right. MA30 is 1815, but the MA200 is 1800. So based on what we've been seeing right now, right, it seems that, right, the gold every time hit about 1800 recently has rebounded. So I kind of suspect that, right, maybe gold is going to test 1815, okay, test 1815. Though the KSI, the blue bars are not very optimistic, but then I kind of believe that it may test 1815, and today's pivot one is 1814. So there's a small chance. If the market stays above OP, we can see 1815 triggered. Okay, so trader, take note of that, yeah? Okay. Silver, let's look at silver. Now, silver has been pretty sideways for quite a while. I still think that silver has to come down to 21.98 first to find a base. 21.98, or if not KCB at $22, I think there'll be a drop, then it'll go up itself. But of course, if that happens, if the drop come in, that means that the gold will not go up, right? So a bit of not very possible. So maybe if let's say I'm wrong on gold, then silver will be right. If I'm right on gold, then silver can come down, yeah? I still think that the better price to buy silver is for $21.98. I think that will be a better, safer price to buy. And once we buy it itself, right, then to go over to $23.10, then it's quite lucrative, yeah? Okay, last two will be the Bitcoin and Ethereum. Now, obviously, it's all right with Metaverse not doing well. There'll be some selling on the market. So for today, you can see now for Ethereum, He has tried to go past the MA30, is the 2749 level, 2749. He's trying to go past it, but every time he hit there, the market just failed. So if he couldn't stay upright, then the downside can bring it all the way down to 2244 level. Right, it happens before previously right here, and the market bottomed out beautifully. So if this time around and the market do pull back down because of a lot of other good reason, then 2244. But the KSI is green, no blue bars, shows that the positiveness is definitely there. So as much as I want 2244, that to go down there itself, I don't think it's very possible immediately. Last one is Bitcoin. Now Bitcoin yesterday has dropped quite a fair bit already. Yesterday it dropped and now it's at 36,800. So if you ask me, I still look at it to go down to BNB, and that's 34,505. Now, if the market comes down to 34,505, I think you can try to buy some because that's a BNB minus 1 times 1. Usually the market will bottom out a bit here. But if you think you want to squeeze the market down lower, you can squeeze it all the way down to this point here itself, and that is 32.45. Okay, the next level that the squeeze all the way down is 32.456 level. Yeah. So I don't think it may not go to 32.456 this time around, but 34.505, very high chance. I want it to go down. Then if you want to buy, you can do this. But at the moment now, the KSI and the KCX all are not in your favor. Okay, all right. Okay, so that will be all for today, MAO. Thank you very much for staying all the way with me yourself. Now let's just remind you the summary of this. To me, it's all right. Basically, the valuation of the current market now is really at a very high level. And of course, based on statistics, it's all right. We are away from the mean. So normally, we're so far from the mean, the market will pull back to the mean level. So traders do watch out for that. But the thing is this, with the current market now down by 15% for most of the index market itself, that 3 days ago was a good time to buy. But now 3 days later, the market recovered by more than 5% from the lowest point. It's kind of like FOMO now, like fear of missing out to buy at this stage right now. I don't want you to look to buy here. If that's the case itself, right, maybe that the market drop another 5-6% again, then if you feel like buying, you can buy. But of course, if the market can drop by 5-6% itself, right, it may accelerate the selling, because that means that whatever in buying itself is just going to be a dead cat rebound. The market may fall a bit more. So traders, be very careful on this. And of course, in crude oil price itself, right, it's either it's be $90 or $84. To me, if you put on $84, you can try. Oops, before we go off itself, there's one thing to share with you before I go, is this one, the VIX, yeah? Now the VIX itself, right, you can see has came down to the level I mentioned, about 20. Yesterday hit a low of 20. I believe that you can try to look at it from between 20 to 17, okay? Any range between 20 to 17 now, with all the valuation that I showed you, the mean itself, I think it's a good time to buy. Buy around this area here. Lower the better, and then you keep it for a couple of weeks. It should be able to give you 32 again. If not, it may go even crazier to 41. Okay, so this could take around. That will take about another few more months. Not immediately. It'll be a February to maybe April or May thingy. All right, but long-term wise itself, this is pretty good. It's 100% potential gain. Well, it could be a 200% gain. So watch out for that itself. Yeah, everybody. Okay, that will be all for today. Thank you very much for staying with me. I wish you all the best. May you guys strike big time in the stock market and the rest of the commodities. Huh? Okay, bye-bye, guys. Have a great day. See you.